Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, February 14th. Happy Valentine's Day to all. Although fresh news is somewhat scarce here overnight, agricultural prices have surged higher. Corn right now is 2 to 4 better. Soybeans are 6 to 8 higher. Wheat prices seem to be leading the charge, up 8 to 12 cents. In the products, we got meal up $2 to $3, while bean oil is up about 30 points. Wheat prices leading the way higher and continued short covering, I think, over major uncertainty over the U.S. winter wheat production. While widespread snow did fall over Kansas and Nebraska earlier this week, the overall depth at no more than a few inches in many areas may not have been enough to prevent winter kills. Temperatures dipped well below zero. Also, we see crop ratings in South America and Argentina just continue to drop. Corn conditions fell 9% last week to only 16% of the crop in good to excellent shape, while 33% of the crop is rated poor to very poor. That's up from 26% last week. Bean conditions also dropped. 15% of the crop is rated good to excellent, while 36% of the crop is rated poor to very poor, and that was up from 32% last week. Although forecasts are viewed as mostly favorable moving forward in Argentina, may not be enough to prevent further production cuts, given the heat and dryness from the first half of the growing season. Widespread rains are forecast for the second half of February, with the heaviest concentration of these rains in the northeast, away from some of the higher production areas in the south. Brazil will continue to see favorable harvest conditions through much of the central part of the country. Wetter outlook is in the deep south in Rio Grande do Sul and in the northern half of Mato Grosso. Corn prices, strong demand continue to give them a lift here as we look for U.S. stocks to drop here in subsequent USDA reports. That despite, the massive long position held by the speculative traders. March corn did stop just shy of this month's high at 498.5, which was a 9-month high. Next resistance above that is at 508. March beans did hold a test of its 100-day moving average yesterday at 1023, setting up this little bit of a bounce. I do sense that prices will ultimately cut below that 100-day moving average and challenge the $10 level, just under the weight of the South American harvest. NOPA crush is out on Monday and is expected to show NOPA members processed about 204 million bushels in January, down from the record amount of 206.6 in December. Meal prices also seen a little bit of a bounce here overnight, however, still not terribly far from their contract lows here at 285 for the spot March contract. Oil prices continue to grab a higher share of the product value. Next resistance for the March contract, not until the February high at 47.54. Malaysia has vowed to crack down on the fraudulent sale of used cooking oil that comes from their country. Wheat, March Chicago, it is approaching its February high, stopped just shy of that so far at 592.5, and resistance for Kansas City that rests at 614.75. Markets paying attention to the Saudi Arabia tender for 600,000 tons of milling wheat. That tender did close today. So thanks for listening, everyone. Have a great Friday and a great 3-day President's weekend.